You may have to fight a battle more than once to win it. Margaret Thatcher. Well, the Iron Lady is right. Every single day we are willing to fight our battles again and again and again so that we can accurately follow price movement. That is our goal here, the goal of our practice trades, our paper trading, all the things that we do here to figure out what's actually going on. Remember, we are trend following, and we are obeying the rules and watching these markets. It has been a weird October. Remember, the big crashes have all occurred in October. It's a skittish month for traders and investors. And with our practice trading, we see how skittish it can be. The good news is we're moving into the fall-winter trading zone. Hopefully everything on the Washington level will sort itself out and we can get some clear guidance with these charts as to where these markets are going. It is a weird time, my friends, I admit that, but there still are opportunities for us to practice trade and do things right. Let's jump into these charts and see where we are. Stocks are down, bonds and gold are up. Bonds are up the most. So let's look. S&P 500 down just barely 0.08%. We do see a green open box candle and our Heiken Ashi candlesticks being drawn. We'll put a special training for you on Heiken Ashi candlesticks. Means average pace, I'm told, in Japanese. We love those types of candles as opposed to the high open, low close. Typical traditional Japanese candlesticks. We like Heiken Ashi candlesticks better. Easier to read, I think more accurate. We see the price percent oscillator still heading down. Derivative oscillator barely holding on to the negative, but still the overall market sentiment is down. Two-day chart. It's down also, but it is heading up. We see a nice big green up candle drawing. Now, if you recall, this is a completed candle now after Friday and Monday pushing right through that weekly trend line. Of course, we blew through the two-day trend line back on the last two-day candle. Derivative oscillator still negative. Price percent oscillator heading up, but still negative. 4-hour chart crossed over in the afternoon on Wednesday, the 9th of October, and really peaked out on Friday morning and is sliding sideways at this point. So what are we looking for, friends? Well, we are looking on this 4-hour chart to see if indeed it's going to cross back over going down while the two-day and the weekly are still in confirmed down moves. Will it do that? I don't know. I don't know if it's going to do that or not. If it does, all well and good. If it does not, it does not. So it looks like we're hanging on that 4-hour chart over the course of this day, somewhere around that weekly trend line. So we'll continue to watch, see what there is to see, and let these charts lead us. So keep your eye on the prize. Be ready to jump into a practice trade on the S&P if it rolls over. If your charts tell you that, now again, just because I'm talking about it doesn't mean you have to practice trade it, but keep it in mind. And at least, again, why not practice trade? It doesn't cost you any money. It just costs you some time because we're virtually trading, right? So look at a trade going down on PSQ if it's the Nasdaq 100. We'll get to that in just a minute. Or SH if it's the S&P 500. We're just practice trading here. You might as well learn what there is to learn. Experiment. Don't invest yourself emotionally in the trade if you don't feel positive about it. If you're doing an experiment on a trade, tell yourself that. Remember, we can only play as we practice. So I want you to practice, practice, practice. Invest yourself emotionally when you feel like this is a real trade. This is something that you feel confident in. If it is simply something you're experimenting with, just tell yourself that, mark that in your notes, and then feel good about it if you just learn something from it and it's not successful. So let's look at what's going on with the Qs. The price percent oscillator is about flat. Derivative oscillator's already gone positive. Now we're still negative on the price percent oscillator. It's below the red signal line, but it is flat. We have a green open box candle that is forming after a green spinning top open box candle the prior week, pushing through the weekly trend line, and of course, well before that, the 2-day trend line. That's how we're opening the week. We go to the 2-day chart, closer and closer to a crossover going up. This candle is drawn now. It finished on Monday. Big green open box candle pushing through the weekly trend line. Derivative oscillator still negative. Price percent oscillator doesn't look like it'll be negative too much longer, but when we look at the 4-hour chart, just like the S&P 500, we see things flattening out. So things literally have stayed below where they peaked back on Friday morning. Let's see if the market's topped out for the short term and maybe rolling over, going down. If so, you might want to look at jumping into a practice trade. Haven't seen it happen yet. It might not happen, but if it does, keep that in mind. Again, PSQ is what you would practice on the down move, or you can just note where you were as far as dollars go on QQQ and just see how well it does going down. Convert that into a percent, and you will see how well you would have done if you'd have done your practice trade on the inverse fund. The reason I don't switch over to inverse funds is just trying to keep it simple here. You can do the same also on your practice trades. Now, we're going to go from QQQ or PSQ. Going to leave stocks, go to 20-year bonds on the weekly. We see that the price percent oscillator continues to pull away from the red signal line. Derivative oscillator continuing to gain downward momentum. A solid red candle forming as the first of the week starts, just the first day of a 5-day candle. We do, however, note that TLT was up for the day 0.73%. On the 2-day chart, we see that we do have a strong red down candle. Price percent oscillator ended up moving away from the red signal line, and the derivative oscillator is negative just barely. Go to the 4-hour chart. You can see where things plumbed down. And of course, we mentioned we really did head down quite nicely on that practice trade from getting in on the afternoon on the 9th after things crossed over in the morning on the 9th and went heavily down. And of course, some of the warnings were, have things bottomed out? Again, don't know where you pulled the trigger on your practice trade to get out. If you're still in, do pay attention to what you're seeing in the charts now. How do you pay the most attention? Of course, if you haven't hit pre-arranged sell prices for your practice trades, well, of course, you always also keep an eye on how strong your 2-day trend looks, in addition to how strong your weekly trend looks. And again, those still look okay. But again, keep your eye on that 4-hour chart, but most importantly on the 2-day and the weekly. Unless you've already assigned, I wanted to make on this practice trade 2.5%, 3%, or I had hit sell points at certain places, or if you're looking for other things to trigger you out, such as violations of 2-day trend lines, weekly trend lines, any number of different things that you might set up to give yourself clues. And again, so many of these are developed by us. How? They're developed by practice trading over and over and over again and learning literally the emotions, the personalities of each of these ETFs and or stocks that you practice trade. And it's by, on a daily basis, practice trading these things, watching these charts, learning the ins and outs, season after season, month after month, week after week, day after day, that you understand how each fund, each ETF, each stock has its own personality. And only by practicing, as we talk about over and over again, are you going to learn those and then learn the market's personality itself. That's where we are on 20-year government bonds. We're going to leave those. And lastly, go to gold, up 0.40% for the day. We see a red candle forming, but again, a little bitty red candle. Doesn't hardly even have a wick on the bottom. It's smaller so far than the 2 prior red down weeks and hasn't plumbed anywhere near the depths and the lows of the 2 prior weeks. Derivative oscillator still gaining downward momentum. Price percent oscillator pulling away from the red signal line. 2-day chart, the latest 2-day candle, a wick about the size of the solid red candle body on the bottom, that bottom wick, and we see the price percent oscillator heading down. Derivative oscillator gained a little bit of downward momentum. And we go to the 4-hour chart, and of course we see where things bottomed out in the morning on Friday, and then sort of started moving up from there. So again, pay attention to what is going on there. Most of attention needs to be paid to those bigger charts. But again, you can see where things moved up in the morning and then topped out about the same spot in the afternoon, up 0.40% for the day. So again, keep your eye on the 2-day chart, which continues to move down, not hammering down, but it is gaining downward momentum. And of course, that weekly chart, which we can see as far as the Heikin-Ashi candlesticks, a weakening so far. Price percent oscillator gaining downward momentum or heading down. Derivative oscillator gaining downward momentum. Price percent oscillator pulling away from the red signal line. So again, continue to watch. Concerns about the way this candle is initially forming and the fact that we have not hit lower lows than we did all the way back on the week ending, the candle ending the 4th of October. So pay close attention. Again, loss limits should always be set, and also profit limits on these practice trades. Again, based on what you have been seeing occurring over this same time period, if you've been practicing for years on this, and or what things have been doing over the course of the last 6 to 12 weeks. Folks, that's where we are. As we end the day, if you've not purchased our book, we have copies available for you. All you got to do is follow the link in the show notes. We have an autographed copy ready to go out to you. If you happen to live overseas and want to buy a copy of the book, what you need to do is email us, cw@chartingwealth.com. We will be happy to send you an invoice through PayPal. Pay that. We'll send you your book wherever you are in the world. If you live in the States, just follow the link in the show notes. We'll clear everything through Square and get your book out to you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.